We got some major changes to how condos are now financed through Fannie and Freddie. That's a conventional loan. So if buying a condo, selling a condo, or you're a condo homeowner is a part of your existence or future, we need to talk about it. I think on the surface, you're going to hear a lot of stuff that maybe is inside speak or lender speak. What I think this boils down to, and what we can simplify this with, is that there are tighter restrictions around how HOAs are financially managed. And the translation of that is that, yes, some HOAs, who I would say maybe are poorly managed, will now be ineligible for purchase through a conventional loan, perhaps, but it also creates a healthier ownership environment for anyone potentially wanting to buy a condo. And I think more insight into how the HOA is run, which could be a surprise to any home buyer who's buying a condo, where now you've bought the condo and you get in and you go, oh shoot, we own this, and now the HOA is a mess. It's stuck. So hopefully this will avoid major challenges for buyers who are considering condos. There's also a few other lifts that we can talk about as well. But on the front end, the first major change is that a process called the limited review is gone. So in the past, if you put down enough, you didn't have to go through the full review. That's gone. Every condo project has to go through the full review. So every HOA is going to get scrutinized. So as a buyer, you're going to know the financial state of the HOA before you get into a 30-year loan and you're stuck with this condo, perhaps. So every condo's got to get through their full review process. Part of that review process is making sure that the reserve account is fully funded. No longer are baseline funding levels accepted. And what this translates to is that, hey, we need to make sure that HOA is collecting enough to run itself and to support the building, right? Overall, a better picture of financial health. If we really boil it down, there's a few other minor changes, but it kind of comes down to that. The HOA has to be run financially sound in a way because it translates for you as a buyer or someone who's trying to sell a condo. Is that payment a true reflection of the investment required to live in this building? Because if you're a buyer, you don't want to get in with a $300 HOA and then a year later find out it's going to go to $1,000. Whether it's through a special assessment because it needs a new roof or they haven't properly funded some of the long-term major maintenance issues. So I think in general, buyers will be prevented from getting blindsided with some major changes to the HOA. Hopefully it's going to push to better financial management of HOAs. Is there going to be some growing pains in the process? Yes. Is that maybe what we don't need in this tough environment to buy? I would agree, but I think in general, the heart of this is probably a wise thing and a better decision for home buyers moving forward. There are some other lifts, so let's talk about it. One is if it's a 10 or fewer units in the HOA, there is no project review. So that gets waived. So think like of 2 fourplexes or 2 fiveplexes that have been turned into more like townhome style. So no HOA full review on that one. And we also got rid of the investor concentration rule, which basically said if investors, people who rent out their condos, make up more than 50% of the HOA, the whole building complex, think of it that way, then it was ineligible. Now that's gone. So if it's a condo complex that's in like a vacation area, think Florida, that's a bad example because Florida is maybe the main reason for all these changes. But somewhere near a vacation area that it makes sense to get an investment property. So it could mean a little bit more of an investment opportunity for somebody who's looking for a second home or vacation property that they can rent out or Airbnb. Maybe a little bit of a lift there. Sure, maybe a little bit more challenging for some of our first-time home buyers who are really needing some of that affordability entrance into like the lower end. But again, hopefully it's short-lived. Hopefully HOAs get the message. So if you know somebody who runs an HOA, is part of an HOA, maybe share this with them, get them some of the news that's gone out about this. Make sure that you have the contact person for the HOA, whether it's, Judy in 404 who's been the president and she's slow or she's on vacation, or it's a professionally managed company. I've seen it all. Professionally managed companies are great, but it's expensive. And just make sure you know how and where to get the documentation, get it early and get it reviewed as quickly as you can up front. So work with a great lender, have a great lending team or partner that can just make sure, hey, we can pre-light anything, especially even if you have a listing, realtors. Got a listing that's coming up, you need the documentation reviewed. We can work on that for you. But I don't know. I'm curious what you think is going to make it easier, harder, better in the long run, maybe painful in the short run. Is it stupid? Is it dumb? Are you excited about the investor change? I think there's some lift, but it's definitely going to come with some growing pains.